Hi friends, Simit here from InformedTrades.com. Today is January 20th, 2014. Time for our daily Forex chart review. For those of you who are just joining us in this process, this is basically where I share the trades I'm placing. I go through 20-some Forex pairs and share basically my take on the markets and what I'm seeing. I look at the daily chart, so it's basically a run through of the daily charts on all the currency pairs I'm looking at. First, I'd like to start with, as those of you who know, with looking at any trades that I currently have on. So actually, last night in the market open session of this week, an order I had on dollar Swiss got placed. Now, if you've been watching my videos from last week, you know that I have a number of entry orders that didn't get filled. I was expecting they would, but they did not. Most of those are still on there, so I still have like 4 orders that are pending. The dollar Swiss did actually get filled, and it's up slightly in my favor. Um, well, dollar Swiss is actually down slightly. You see, it's a red candle, but it's in my position, in my favor, as I shorted at this black line. The stop is at this red line, and the target profit is green line. So far, this looks like it's excuse me. So far, it looks like it's a reversal candlestick shaping up here. Reversal candlestick at resistance. However, which confirms I entered based on this resistance level and this candle that we saw here. So once I saw this big move down, I put an entry order, and it's just now getting filled. The entry order was placed then on April 9th, I believe, or possibly April 10th. But it's just now getting filled. And now it's just waiting. It's too early to move it to break even, and we'll see. Hopefully it heads down here. This is about a 5.5 to 1 reward risk. So this distance here is about 5.5 times the size of this distance, which is good and consistent with, that's a trading opportunity I really like to see. So that's dollar Swiss. No real update. Excuse me. No real update. That's just a position. Now let's go at the other positions. Euro, US dollar. Euro, US dollar. This is sort of the inverse of dollar Swiss. So even though there is black and red and green lines on here, I did not place an order, which is good because the order I was looking at, if I had placed it, would have gotten stopped out. I felt more comfortable looking at dollar Swiss, so I did not do anything here. Euro, Australian, and I'm not going to. Dollar Swiss is, this looks like it could be a good, potential position to add to, but I'd rather just focus on dollar Swiss, which is going to move the same way as euro dollar is, and I'm more comfortable with the technicals on dollar Swiss. Euro, Australian dollar. Okay, we've talked about this a bunch. Let's see what happens when price gets to 150. Right now it's in a trading range of sorts if it gets to 150. But basically, it's in that range. I'd like to see it fall perhaps to the bottom as a buying opportunity or break out of this range. So we'll see. But for now, nothing, no action to take. Euro, Canadian dollar. Same situation. So for the euro and the pound as well, there's been a bit of a run up and just looking for that bottom to enter on. Let's actually add the moving averages here. The one thing I would like to add about this chart is, it's clearly, this is an example of a nice uptrend. So if you're a swing trader or you're trading the style that I am, you're looking for retracements in this uptrend. So you're looking for, like, here was a potential pullback. Hindsight's always 20/20. Here was a pullback. Here was a pullback. Here, basically each time prices touch the 50 moving average, which is one of the reasons I like to plot it, that's been a buying opportunity. So that's, looking for the next one here. There might be one here at this support level. We see that the market responded, was it acts as a resistance level here. That could be resistance turn support. This is the earliest really I would consider entering. And we'll see what happens and what else is going on other pairs, what else is going on with the Canadian dollar. If price can fall, it's now 140 pips above this black line. Okay. Now euro pound. Okay, this is also another nice example. When the 50 moving average is closer to price than the 200 exponential moving average, that's also a good sign that or a sign of a clear trend. That's what I really like to see. Make sure that the trend is clear. The trend here is clearly down, so looking for a pullback that we can short on. Perhaps it or one level, identified. You can always see the black level here, 83.44, which is about 90 pips or so away um, from the current level. But yeah, so really there's nothing that can be done, or at least with my approach, when you see something like this, maybe the pullback will come, maybe it'll come later, but not really interested in chasing the momentum or in trying to trade against the trend. Okay, now is Euro Yen. Okay, so we are, interestingly, we do have a pullback to the 50 moving, simple moving average, and we also have a gap here, which is interesting. And we have a huge section on gaps on InformedTrades.com. That could be an interesting setup here. Gaps do tend to fill often, especially when they gap in the direction of the trend. So one could argue that this is in the direction of the trend. The price has started declining. I like to see. To me, the trend is still upwards, so this is a better example of what's called a novice gap. There was a gap here, and then price kept moving. When you see a novice gap like that, it suggests that it's the trend is running out of momentum. So here we see price was trending upwards. We have a novice gap here back in December. The trend is running out of momentum. So it did end up going a little bit higher, but you can start looking for short opportunities. Once we see this big red candle down, that could be our short. Our Q to short, followed by 2 candles in a tight range. But in any event, like as this chart illustrates, I would want to see it fall to the black line at least before I consider going long the euro against the yen. Short yen is maybe my favorite trade. I'm definitely agreeing with Kyle Bass, John Malden. We have a lot of content on this. InformedTrades.com/Japan. But I don't want to wait, or I'd prefer to wait and get the price that I really like. So that's Euro Yen, Euro Kiwi. Okay, here's sort of the box I've drawn, as you can see. So long as it's within this range, I may wish to buy at the blue line, actually. I know there's a lot of lines on there, but I buy the bottom of the box and sell at the top of the box. To me, it's a little choppy. So really, we'll see if we break out of the box, or I'll trade bottom to the top, the range of the box. I'm going to make some of these other lines shorter. Or actually, change the style a bit. And make them a little thinner. So I like to have the visualization tonight. It helps me to understand it a little more, synthesize all that information. I used to think it was not that important, but it actually found it to be worth taking the time. At least that's for me. Obviously, each trader needs to find the appropriate method for them to help synthesize all the information in the market there. So to me, that's a little clear that I'm interested in trading the range. Interestingly, though, if I had gone long here at this black line, it so far it's been working out well. So, but in any event, there's no order placed, so let's see if it falls to this blue line. I've been confused by this Euro Kiwi and Pound Kiwi as well, in light of the huge range. Okay, so that does it for the Euro pairs. No real action, just sort of waiting for it to pull back more. That's the basic synopsis. Let's move on to the pound. Pound Australian dollar. Yep, same situation. You can see, it's going to be a lot of mirroring. Pound Australian dollar still waiting for the pullback. Pound Canada, I would imagine we're still waiting for the pullback as well. Yeah. Let's actually at least draw a line. When a market trends so much without having a pullback for a while, it becomes even hard to know where it can pull back to, and often you have a sudden collapse as a result. Here we see a range. This could be distribution, although I said the same thing here. One of the reasons I don't like to trade against the trend is just so much easier, for me at least at this point. I had been calling potential counter trend opportunities in the Canadian dollar the past week. However, I didn't trade it, fortunately, because if I had, it would have been wrong. But that just illustrates why I don't trade it. I find trading with the trend to be so much easier. My percentage on trading with the trend is still lower than 50%, but that's okay because the wins are disproportionately large. So you can even win less than 50% of the time, and provided you have the discipline to ride the trend, it'll work to your advantage. Okay, so that's sort of, we'll get a better idea. Let's see if price can actually fall to that level, but that's basically the earliest I would consider doing something. So really, pound just waiting. Pound Swiss. Wow, that's interesting. So we have a gap here, and it looks like it could end up reversing. So we saw sort of the same thing on dollar Swiss, right? So maybe the Swiss franc is gearing up for a rally. That's what it looks like on dollar Swiss and perhaps on pound Swiss. Although again here we have an upwards trend, a bullish trend, so I'm more interested in buying the dip than I am in selling the rally. Pound yen. And that's sort of, for those who are new to the chart analysis, maybe the first thing, at least my approach, is to see what the direction of the trend is, because that tells you the direction you're going to trade in. Pound yen, clearly chart is trending upwards here, and one way of telling the trend is just where is price relative to the 50 simple moving average. Another thing to look for is that the 50 simple moving average is above, or is closer to price, I should say, than the 200 exponential average. And we have those criteria met in this chart. So then it's just a matter of identifying a support level and the market would pull back to, perhaps this one. And when it's not there, you just need to be patient and wait. Right now we have 300 pips to go on pound yen. And then once it gets to that support level, then we can take a look at the candlesticks. So it's a lot of patience, at least with my approach here, but I found that to be advantageous. You know, for those who have been watching these videos, you know, we go through all these charts, and on some days there's no orders placed. Other days there's one or two. There was one day last week where 4 orders was placed, although that's certainly an anomaly. Pound Kiwi. Okay, here we go. So this is another one, just like Euro Kiwi. I really would prefer, I've been a little confused by the price action here. So I really would prefer to trade this as a range or get out of that range altogether, but we'll see. As for now, there's no opportunity. Perhaps if it falls to here, I could consider something, but I don't know. We'll see. I'm not 100% confident in the trend of this chart. And just to illustrate why, you can see, you know, there is a pattern of higher highs here, and the 50 is above the 200, so that suggests a bullish trend, and that's why I'd want to potentially buy here. But it's not really that great of a trend. So, you know, yes, this high is higher than this one, but barely, and it's been over an extended amount of time. So to me, it almost seems a little range bound. When it's a clear channel, that's sort of the easiest scenario in a lot of ways to trade. Oh, that's what I was just looking at. Pound Kiwi. Okay, so that puts us at pound dollar. And that's sort of, you know, if you're not, at least with my approach, if I'm less confident in analysis of a certain pair, I'll tend to stay away from it. I want the trades that I'm really confident in, that I really like and feel good about. I'm not trying to force anything. Pound US dollar, simply waiting for the pullback. And related to the idea of not forcing anything is one of experience and comfort. You know, when you're skilled in anything, it should be fairly straightforward. You know, a musician is a classic example. For a beginner, playing a simple chord is difficult. For an experienced musician, that's a very elementary thing. It's sort of the same in trading. Analyzing a chart in the beginning can be difficult. Then it becomes like the back of your hand. Of course, we're always improving. I still have a long ways to go on my journey, and these videos are just as much for me as they are for anyone else who may be watching and learning. That's pound, so let's go to US dollar. Dollar Canada. waiting for the pullback. You can see now this is a clear trend. We just need to wait for the pullback. And we saw this a lot with Canadian dollar. It's really just been losing a lot of value. Hasn't been giving much of a pullback. Occasionally it shows signs right here, potential sign, but kept going higher. That illustrates the danger in going against the trend. Even when you get a sign, it's often it's a little risky. Dollar Swiss. Now this is the trade I'm already in. It's in my favor a little bit. So no action take though. Still needed to get much closer. It's slightly better than break even. Not much. You can see that here. Entered at the black line. So still got a ways to go. Not really ready to do anything on it yet. Just sit and wait. Could easily still go against me at this point as well. Dollar yen. No. Nothing on dollar yen. Let's see if it falls. We're getting closer. It's got about 120 pips before it can fall to 102.80. And when it falls to that level, again, as you can see, this line is lighter and thinner. I'd really like it to fall to 101.30. If it falls to 102.80, I won't do anything, but I've just got that on there as at least a first milestone to consider. It's got to break through here. Then we'll really start to see some bears get in and bulls be more exhausted. Okay. Dollar Singapore. Wow, look at this. So the trend is clearly, just soaring. Nothing to do here. I did try when price was, I don't know, maybe here or so. I did try to put on an order in any event. I think when price fell here, I did put on an order here, but obviously it never got filled. That was it. One day, and then boom, started rallying again. Okay, so that's a dollar. Canadian dollar now. Canada Swiss. Okay. We're starting to form that base here. This could be accumulation, and we could be rallying here, but we'll see. Still got a long ways to go. That is still 210 pips on Canada Swiss. And the Swiss franc, as we saw, has been rallying on the other pairs. So that would suggest this pair's going to continue heading down. But we'll see. This is another example of a very clear trend. So when you do get that pullback in a clear trend, like here, it could be a really nice opportunity. Sets a very favorable reward risk. So that's really what we're waiting for. Just to give you an example, draw that channel so you can see. You see that there's a bit of a channel there. So there maybe. So this is a good, the key with these channels is to identify them early on enough, but if you see, let's say, you start drawing the channel here and here, you start getting an idea. Then when it comes up to here, you can short. And that has potential to be a great short, potentially here as well, depending on, especially when you see the 50 moving average here. Here also could have been interesting. In any event, but this illustrates a clear trend, which is what I'm most interested in. Canada Yen. Okay, this is still in a range, basically. Little choppy price action. Price is between the 50 and 200 EMA. So when price is between those moving averages, I tend to regard as a little choppy. And in general, I'll prefer to stay out of those pairs. If I can clearly identify the range as I have in this box, and it goes to the bottom, and price is still between those moving averages, then I may consider trading. But other than that, I still have a bias towards seeing trends, so I'll just generally stay away from these things. Okay, so that does it for the Canadian dollar. Now time to move to the Australian dollar, Aussie CAD here. This was another order. I had a bunch of orders. Last week was the week I tried. I had correctly forecasted that Australian dollar would fall in value last week. However, none of my orders got filled except for dollar Swiss, so none of my Australian dollar orders got filled. Such is life, but I had entered here, and I still, the thing that at least gives me some consolation is that I think I traded it well. So I saw this reversal candlestick at resistance. I put on an entry order. I don't think I would do it any different. You know, here I think is the correct level to enter at, this black line, which is the resistance level. It just didn't pull back there, so that's that. In any event, we'll see. You know, wait for another pullback, I suppose. Nothing on Australian dollar, Canada dollar. Aussie Swiss. Yeah, this was another one. And this one actually, this was the one I did mess up a little bit on. And if Swiss dollar, so Swiss dollar, interestingly, is not rallying today against Aussie Swiss. So it is against Canada, U.S. dollar, pound, but against the Australian dollar is outperforming Swiss today. In any event, the one mistake I did make last week was that I should have originally placed my entry order here, which was just being a little too demanding. And if I had put it here initially, so I entered after this candle was when I put the entry order. If I had put it at this black line, I would have gotten filled the next day. I've since moved it to this black line, which is probably a more appropriate level to enter at, but did not get filled, at least not yet. Aussie Yen. Okay, so now we're at the bottom of this range. This is interesting. Let's take a look at the 4-hour chart. Okay, so we did touch the bottom of the range. I don't know if we'll touch it again, but this is let's go back to the daily. Yeah. Okay, I mean, I think this is the kind of, I'm going to place an entry order here, testing the bottom of the range to see if it goes back and touches the bottom of the range again. I will put in that entry. I will get filled. So, what happened? Okay, so we can remove that. That was incorrect. Let's go with the horizontal line here. Okay, so that'll basically be where the entry order is. We'll put the stop right there probably. So risk about 70 pips. And we will target target the upper range. I wonder if I should target here instead. Yeah, I think I'll do that. Okay, so I'm looking to gain about 300. I'm risking 70, so a little more than 4-to-1 reward risk. That's a setup that I'll take. I like that. This is a range-bound trade. Okay, so we'll be placing this order. One order is placed. Been trading Australian dollar a lot lately since I started doing these videos, and New Zealand dollar. So the orders often come at the end of the video. By the time I get to Aussie and Kiwi. But basically, let's see if price gets filled. We'll trade, buying the bottom of this range and going to the top. Aussie Yen. Okay, and with the yen, what I'd really like to do is, even if it gets to this level, I'll probably cut out half, and I'd really like to see, there's a potential for it to go all the way up to, with the yen, I want to, start swinging for the fences a little bit, because it's going to go south in a very painful way. So I would like to take half off. The ideal trade I would like to place here is enter here. Obviously, it does not hit the stop and goes very quickly to the green line here. I take off half my position here, and then the rest I would like to hold all the way up until here, 105. Let's turn that green. It would be pretty substantial returns. Very nice for reward risk. And that's sort of, those of us who are expecting massive devaluation in yen, which definitely includes me, I think that's sort of, you want to have a couple opportunities where you're looking for something like that with the yen. I mean, it really could go even higher. The prognosis for the yen is very bleak, but I think that's a good target. And of course, there's going to be a lot of pullbacks along the way, even if it does go fall dramatically. Okay, so that's Aussie Yen. We'll be placing that order. Aussie Kiwi, yeah, still waiting for that pullback. So we got about 250 pips to go, right? Yeah, 250 pips to go until we hit a resistance level of sorts. It might be an interesting short opportunity. Until then, the trend here is clearly down. Okay, Aussie US dollar. Trend here is down. Very similar to Aussie Kiwi. Trend is down, so we're waiting for its price to hit resistance. And let's see if we can get there. We still have about 250 to go, just like Aussie Kiwi. Okay. So that does it for the Australian dollar. Now we go to New Zealand dollar. Kiwi Looney here. Yes. Okay, so another clearly uptrending market, and we have our Fibonacci analysis here. So we got a ways to go here. 300 pips about basically before we can consider buying a dip. But until then, nothing. Just sort of waiting. New Zealand Swiss. Okay, we're in the middle of the range, and like I mentioned here, you see prices between the 200 exponential moving average and the 50 moving average. To me, that suggests a choppy market. I don't really like to trade that. If it will, like I am with Aussie Yen, if it goes to the top or bottom of the range, I can be interested in making a range-bound trade because in many instances, those have a very nice reward risk setup, and it's a pretty straightforward analysis. However, if it's just in the middle of the range, I'd rather just wait. So trading is a lot of waiting, regardless of what style you have. It's for almost everyone. It's a lot of waiting. Some people compare it to hunting. I don't hunt, but I can sort of understand the comparison. I can understand how hunters spend a lot of time waiting for their targets. Trading is a lot the same. You're like hunting for profits. You're waiting for the opportunity. Kiwi Yen. Okay, still need to fall a little bit further. Yeah, so this is another. Well, okay. So, and what was the other pair I drew this on? I think it was maybe dollar yen or euro yen. But we did reach that first sort of milestone. I would like to see it follow that thick black line, but at least on Kiwi yen, we reached that nearest resistance. Now, I don't like to. This is too little of a pullback, so that's also where I like Fibonacci. Let's actually do Fibonacci. Add that. Now's a good time to add that. So we would add it from a swing low often to a swing high. So from this perspective, you would want a much more of a pullback. The support level is the biggest sign, though. So once it falls, and especially with a 50 moving average there, if you can fall to 84.70. Another thing we can look at is a price channel, which looks like a very nice one is forming. You can sort of already see it. Well, let's draw it to make it even clearer. Okay, so we're below that price channel now, which is good in a way. Okay, so that's sort of the price channel. In general, though, yeah, I really want to see it fall to 84.76. Not going to do anything until then. It is sort of at the bottom of the price channel. That's one argument for entering now. However, I like Aussie Yen. So we do have a hammer at this sort of support level, which is at the bottom of the price channel. Some may find that sufficient. I want a bigger pullback. More importantly, though, I see an opportunity to short the yen on Australian dollar, and that's a chart pattern I'm more comfortable with, that trading range. So I'm just going to take that. And we saw something similar with dollar Swiss. Last week, dollar Swiss and euro dollar both offered setups in going long the dollar. I was going short the dollar. I was more comfortable with dollar Swiss, with shorting dollar Swiss rather than going long euro dollar. So I just took that. Same scenario here. I'm more comfortable buying this Aussie Yen than I am in buying Kiwi Yen. Now, in all likelihood, if they're going to move, they're going to have a similar. Now, they didn't. That's one thing to bear in mind is that Kiwi Yen has really rallied, whereas Aussie Yen's in that range. But at least now they may move together, at least in the short term, at least enough for me to get that entry order in and perhaps move the break even if it rallies enough, and perhaps even get a target, hit a profit target. So basically, I think it's a lower risk. I'm more confident in the other one. I'm always looking for ways to have a lot of confidence and minimize my risk, which is sort of the same thing in trading, or there's big overlap. Confidence is important. So that's basically what I'm doing. I like the Aussie Yen better than the Kiwi Yen, so I'll take that. And I think that does it, right? Oh, there's one more pair, which is the Kiwi US dollar. Right, and that's in a range here. This is another pair where price is between the 50 simple moving average and the 200 exponential moving average. That's a choppy one, so if it can fall to the range, I'll definitely trade the range. Other than that, I'd rather just wait. That concludes our daily chart session. So the one trade that I'll be placing today is Aussie Yen. I'll have this documented on my blog on InformedTrades if you want to see some text commentary, see the chart. Any questions you have, anything you want to add, join us at our learning community, InformedTrades.com. Thanks and best of luck in your trading.